Catching up with Sunil D'Souza, the managing director at Whirlpool, to talk to him about how sales have been and what the lack of sales can have, what impact the lack of sales can have on FY19 going forward. So, Sunil, good afternoon and thanks for joining us. A lot of your peers have already spoken about, well, a lackluster summer coming through. What kind of traction are you seeing in your company, and what does that mean for perhaps earnings for Q1 moving in, and what does it mean for FY19 as well?
Yeah, so before I talk about the sales specifically for this summer, just want to say that we've had great momentum for Whirlpool of India. In the last 3 fiscal years, we've grown 5, 14 and 24% a year. Even the last quarter, we came in at 1,257 crores top line and a profit after tax of 91. And for the full fiscal year, we came in close to 5,000 crores and a PAT of 351. So I would dare say that we're coming with momentum behind us. That said, we do see good economic indicators. The macros have been holding out. It's been a smooth operating environment. But yes, this year, summer has played a bit truant. That said, we've always maintained that we will continue to grow double digit and we will continue to grow ahead of industry. I think we are well on track for that. Summer and the entire volatility of commodity currency, the Whirlpool of India team is a very battle-hardened team, I may call it, and we're used to tackling this volatility over the years. The team has been through ups and downs. We've got a very strong portfolio. We've actually ramped up our execution quite a bit. Both portfolio and geographic expansion plans are on track. Shop floor execution is probably at the best level it's been in years. So we feel quite confident of where we are and our momentum as we move ahead.
Right, Sunil. Research suggests that a lot of decisions when it comes to consumer durables are made on the shop floor itself. And based on that, what are your plans here in terms of increasing personnel on the shop floor to influence some of these customers when they go ahead and are looking for buying some of these consumer durables?
Okay, so in this business, the standard analogy is the consumer does a lot of research with friends, family, online, reading about things because it is a high-ticket purchase item. After that, historically, we used to say that the consumer would walk into 3 shop floors before making a decision. And anyway, even after that, 75% of the decisions were made on the last shop floor. Yes, the information flows have changed from friends and family to more online, from just reading to more of blogs and consumer research reports which are available online, etc. But even then, I would dare say that 75% of the decisions are still made on the shop floor. Because there is a variety of brands out there with a variety of offerings, different features, benefits, value propositions, technologies, the consumer is grappling with all these details, and therefore the final decision is made when they actually look at the product, evaluate it in their mind, and then make the purchase decision. And therefore, as I mentioned, both geographic expansion in terms of being at the outlet when the consumer makes the decision, and the second is making sure that the execution in the outlet is right up there, because ultimately, the product is evaluated by the consumer and the consumer makes the decisions. So we've ramped up, we've used digitization a lot to educate our sales force who is on the shop floor. We've ramped up our online web pages, etc. as consumer make decisions. Even at the point of purchase on the shop floor, we have significantly ramped up our execution on the shop floors in some terms of planograms, etc. The POS, the product stories that are available there, and the kind of information that is available there, that has been stepped up 1 or 2 notches. So all in all, we feel pretty confident that if a consumer walks in and stands in front of a set of refrigerators, which includes Whirlpool, we do feel quite confident that the consumer will definitely have Whirlpool right up at the top of their mind as they're making the decision.
And can you also tell us a little more about the plans of separating your mass premium segment?
When I talk about the product portfolio, I would split it into two different parts. A is categories. If you look at categories, we are very strong in refrigerators and washers, and we are trying to expand into adjacent categories, as I call it, about cooking, water, air, etc. In the products itself, and when I come specifically to refrigerators and washers, I would segment the whole market into three distinct spaces: mass, which is the lower end, mass premium, and premium. Historically, Whirlpool has been a very strong player in the mass premium segment, which is where the significant part of the market lies. So in the mass premium segment, we are making sure we are strengthening our portfolio. We are adding features and benefits which makes the product much more appealing. So we are already strong there, and we are strengthening it by adding features, benefits, technology, etc. The two places where we see scope for expansion is the mass, which gives us scale, and premium, which gives us both image and profitability, that's per unit. So we are expanding both ends of the spectrum, and that is very, very visible in the product mix that we have moving ahead. So A, in terms of the segments itself, expanding the spaces, and B, in terms of categories, moving into adjacencies and expanding those categories. That is where I think we will derive maximum leverage from the brand, network, team, manufacturing spaces that we have.
And Sunil, we're also reading about commodity costs inching up higher. What does it mean for your raw materials costs, hence gross margins? And what about your operating margins outlook over the next couple of years?
First, let me talk about the input costs that you mentioned. After, I would say, a decent amount of sort of flattish numbers that we saw both on commodity and currency, we've seen an uptick both on commodities and a depreciation of the rupee, both of which impact our business quite significantly. It impacts us, it impacts all the players in the industry because quite a lot of the components that the industry uses are imported, and therefore the rupee depreciation makes an impact. Quite a lot of the raw material that we use is oil dependent or a derivative of oil dependent, like energy costs, etc. for steel, and therefore the pressures will mount. So we do see headwinds on both commodities and currencies which have escalated, and therefore we need to tackle it going ahead. It's a fine balance of making sure we balance commodity, currency, make sure that the pricing is right, make sure that the features, benefits are right. All in all, the Indian consumer is a value buyer, and we've got to make sure that the Whirlpool portfolio appeals to the consumer in terms of value. That said, it's a constant jugglery between margins, volume momentum, etc. I would just like to say that Whirlpool, we are immensely focused on maintaining margins or growing margins. We are not in the volume game for volume's sake. It has to be a profitable business, and we will continue to drive volumes at a double-digit growth, which we are confident of given our portfolio and the efficiencies that we have on the table.
Okay, Sunil, we'll leave it at that. Thanks for joining us and giving us an outlook on Whirlpool.